Hey everyone, welcome to Flywheelpod, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on chain, you've come to the right place. This is DeFi Dave, here with capital K. We're here to help you harness the power of the flywheel. And talk about a powerful episode today, Kiet. Non-stop alpha, like literally every minute, there's just alpha, like an IV being injected into my veins, like at every moment. What are your thoughts on this episode?
It was just raining alpha, dude.
Raining alpha,
If
yeah.
if I didn't have to host, I would probably be taking notes
Taking
and just
notes.
like going to each of these like websites and join all the
Honestly,
discords.
if this was like the National Weather Service, I would have a severe hurricane warning for the amount of alpha because it was just so powerful. The like just overwhelming amounts of alpha, and like
Alpha
I can't
flood warning.
alpha flood warning, severe flood warning, and I can't emphasize that enough. Like nonstop, whether it's about Frax, whether it's about stuff happening on Arbitrum, or whether it's about Berachain. Like we broke down like every part, like point by point by point, and I think like our advanced DeFi degens out there are gonna really appreciate breakdowns here.
Yeah, and just a quick tip for the readers. I would probably listen to this at a desktop because we're going to show the thread and have a link to the thread so you could actually do some due diligence and obviously DYOR and all the projects. But this is a great kickoff to your research.
Yeah, and don't be intimidated if you don't get everything at first, because I didn't. And it takes listening a few times. It takes you going about doing your own research. And so this is definitely a special episode in store. Don't forget to subscribe to us on YouTube. We have almost 700 subscribers, probably more. We keep on blowing up. You love to see it. Hit those bell notifications. You can follow us on Twitter at Flywheelpod. You can join our Telegram group at Flywheelpod. You can follow me on Twitter at DeFi Dave 22. And you can follow my co-host at 0xK. And let's get the flywheel spinning. Hey everyone. All right, let's get this one started. 0x24. Thank you for joining us. It's honestly an honor to have you on. Like, I think you're one of the most underrated threaders out there. Like, always high quality alpha in your threads, and not just like alpha like in projects, but the way you describe projects even before they're released. It's really impressive. So thanks for joining us.
Yeah, appreciate it, and glad to be here. You guys are a public good for Frax, and look forward to listening to all your podcasts.
Thanks. That's much appreciated, sir. So to get this started, on your Twitter bio, it says like you used to do MMA, you're in TradFi. Like, can you give us like a little bit of your background and origin story, and then like how you got into DeFi?
Yeah, for sure. So I studied finance in undergrad. I graduated, worked at an investment bank, and I've pretty much spent my whole career, and I'm going to date myself, like coming up on like 10 years working in investment banking, working with tech companies.
What kind of school did you go to? Was it an Ivy League school, a state school?
No, it was a private school in California, so not an Ivy League. So I actually started at kind of like a smaller bank, and then have worked at some of the biggest banks, I guess, and then all over I've worked at like probably like three places, doing the whole gambit of like equity financing, debt financing, just advisory and M&A. And now I'm still working in my TradFi job, hence my Anon account. And yeah, just advising on M&A for tech companies, which has been interesting to see. Like as I've gotten into DeFi, like drawing parallels between how stuff has worked, on TradFi rails, and then what's happening on chain, and drawing parallels between the two.
Yeah, your story sounds quite similar to Haim, who worked in a traditional finance job at Anheuser-Busch, or traditional finance position per se. So like, what are like some like stark differences you see, and like, do you feel like working in TradFi, it's kind of dated, quote unquote, and like you're in DeFi, it moves so fast, it has like a lot of different moving parts, or is it like, do you see them more in parallel with each other?
Yeah, it's a good question. Like, I definitely think things are dated, like at the most basic level. Like I've sat around waiting for an 8 or 9 figure wire to clear and like hit an account, and like things get messed up, and like everyone's like scrambling, and it's a fire drill, and like stuff like that seems wild and today's kind of like environment, right? But like I don't personally believe that like, you know, TradFi will completely go away. I just don't believe that like, you know, banks, their board of directors, shareholders are going to be okay with like just giving up profits like indefinitely, candidly. However, I do believe that DeFi will continue to kind of like eat share from TradFi, and there's just like a lot of stuff that DeFi brings to the table that, and this is kind of what got me interested in it, right? Like that was just kind of like light bulb moment for me, I guess. Like, you know, for little stuff like, you know, if you're living in a third world country and you want to buy $200 of like Apple or Amazon stock, like that's not doable. Like you can't do that. Or I mean, if your salary's in like, you know, quoted in US dollars but get converted at like a different currency, you can't hedge that risk. Like there's so much stuff that DeFi enables that I think once that is like widely accepted, there'll just be larger use cases that are used more broadly. And like I think that's kind of like the long term, my vision, I guess, for DeFi, rather than it completely replacing TradFi. But I think it ends up being like a critical rail that that you know everyone operates on or with in one form or another, kind of.
Okay, cool. So you see it as both like an onboarding rail for people who haven't had traditional financial access, like you said, like with people in outside the U.S. or like in developing countries, they can't buy stock in like Apple and other major tech stocks, and so this would give them an opportunity. And you kind of see that with these like synthetic stocks.
Yeah.
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 And, yeah. Go ahead.
No, go ahead.
And then
Uh,
yeah. Or go ahead.
Sorry. Yeah, and I was just gonna say also like I don't anticipate like everyone getting on chain like doing their own self custody. Like I think there'll be a lot of back end stuff that DeFi enables that may help like make, you know, banks and like help make things more efficient for banks, and or, you know, companies will bring certain assets, certain balance sheet assets, treasuries, etc., on chain once, you know, we get to a stage of a bit more maturation, I think. So I think it'll be, you know, back end infrastructure for some people that may not onboard fully, and I think it'll make things more efficient for off-chain entities today, if you will. But I don't think I don't personally envision a world where like everyone kind of gives up a bank account and just custodies everything, and like, you know, there aren't massive, you know, transactions still done with like global, you know, investment banks, etc. But I do think that there are different use cases that DeFi will like enable and or replace from TradFi, and like I think that's like a huge market in and of itself, kind of.
Do you see any beginnings of that back-end infrastructure coming, or like that's already here? Like, when do you expect for, you know, there to be quote-unquote mass adoption by banks and institutions?
Yeah, I mean, to be honest, like it's tough. Like, you know, there was something about like I think the government's trying to start their own like stable coin. Like we'll see what that is or how that works or whatever. I think regulation, to be honest, like is unclear. I think once there is more clarity around that, it will be easier. I think we're moving in that direction. It's kind of hard to say when we get to kind of like the end game, but of course, like I think DeFi is just becoming sort of bigger and bigger. But I think it's hard to like kind of really pinpoint it, but I think for sure that there are, you know, you're seeing more stuff move on chain, and I think we're moving in that direction, but I still think there's like building, candidly, that needs to like happen to get there.
Yeah, what kind of building?
I mean, I think just like at the most basic level, there's like a level of like financial reporting, business professionalism, if you will, with like different protocols. Like I think for like an endowment or a pension to go put money into stuff, and like they can't go track like historical financials, don't understand projections, and like there's no way for them to really like get under the covers unless they're like going and analyzing blockchain themselves, which I don't think you can expect, you know, investors and other entities to like really do that. It's like one thing. Like another thing in DeFi, like a big kind of narrative I think will come in the next couple of years is like I think fixed rate lending is kind of lacking, to be honest, and I think like infrastructure around that. So like what I mean by that is like, you know, in TradFi, like interest rate swaps and interest rate derivatives are like a massive, like probably the biggest derivatives market there is. And like what that enables is like, I think if you want a company or like a corporation, investment fund, whatever, to come on chain, take out like $1 billion loan, I think doing a variable like rate loan from Aave where they're paying, 1-2%, and then all of a sudden it spikes to 20%, that just can't like happen. You
Yeah.
can't like get that capital on chain. And like, so what that like rate swaps enable is like, okay, you can still get that loan from Aave. You can swap that into a fixed rate instrument. And like, once that infrastructure is built and there's more sort of liquidity in those markets, I think you'll see more and more of those activities kind of happen on chain.
Yeah, I believe Volts with a Z at the end. So Volts
Yeah.
is interest rate swaps that I've seen.
Yep. Yeah, they're exactly. Yeah. Like
Yeah.
I think they're like one of the first ones I've seen. There's some other protocol I think it like literally launched this week or something. I'm forgetting the name.
And
But
you made a really important point in the first thing that you said with the financial reporting. I think that's the thing that's lacking the most in all of DeFi. People are so obsessed with building, which is obviously important, but like it's kind of like when you have like a Lego set and you don't have the instructions. in a way, I don't know why I just thought of that comparison, but if you don't have like a way to like read what's going on, and also if you don't have a way to keep track of what's going on, then what good is it?
yeah, 100. I couldn't agree more. And like, especially like, I mean, what I've like my career has been like analyzing companies, like valuing them, like thinking about like where they're going, like strategically, different like kind of markets, etc. And like that's like really hard to do in DeFi, like unless you kind of can figure out Dune or someone's already built like a dashboard or that they have a good dashboard. But even so, there's no like standardization whatsoever. And like I just think that's going to be critical, like especially like as institutional capital comes in to the markets and you have institutional flows, like they're going to have they have their investment committees, and they're just not going to be able to commit certain levels of capital without that level of like baseline transparency, I guess.
Yeah, I think like one thing that's really difficult is that every protocol is different. Like how
Yeah.
they automate things, how they keep track of things, like how Frax keeps track of revenue is very different from everything else. From like other protocols and stuff, and like what people consider like internal fees, external fees. You get where I'm going. And so it's like very hard to have standardization unless you like go into unless you're a person, you go into like every doc of like every project and figure it out, which is just not feasible for these large institutions.
No, that I completely agree with. I kind of meant more like internally, like
Oh, okay.
standardize in a way where I like, and I'm not saying they do things differently, but like if I were to like jump onto like Frax's dashboard, it's like really hard for me, I guess, to say like, okay, what are the like key things that matter? Or where would like where would like profits or revenues, I guess, like once like Frax Lend is live, like AMOs deployed into like this, that, what is like the cost of each, and like where is like the FXS dilution coming from, like just like basic almost like KPIs, and like what are we trying to like grow and hit, and like what should you be focused on, and like what are the things that matter internally, I guess, for your own protocol? What are those metrics? How have you tracked to those metrics and like those projections? And just like that basic level of like reporting. And then also, I mean, we'll talk more about this later, I imagine, but like with Frax, like I think Sam's vision is like so impressive, and like once you actually understand it and unpack it, it's incredibly compelling. I think one of the challenges is that people just don't really appreciate that, and people don't understand it, and I don't think it's easy unless you're willing to spend hours and days on the docs and then hours in the Telegram, which I think you can't have that baseline expectation for everyone, because everyone isn't going to do that work, I guess.
Yeah, let's get into Frax now. Like Kit, you've been keeping track of the KPIs of Frax over the past few weeks. Like you would know more than anyone, like what's going on, the progress, and like what's it like trying to keep track of them. Because me and you have been trying to dive into those numbers for months. We've been trying to like make this legible for the wider public and people who are interested. So like, what are your thoughts about just keeping track of Frax, and like how's it going?
I mean, let's first start off by saying it's a pain, like a pain in the butt, just to kind of figure out where things are. If I didn't have a Dune wizard as a buddy of mine, aka Seba, to ask him where to look for things, I really wouldn't know where to start. That's a huge issue. And I really agree with what D24 said about having a very clear, almost like a gap standard, right? Like, the equivalent of the, I think it's like generally accepted accounting practices or principle, I forgot, but like something that just ties the whole industry together. And this is how we classify revenue. This is how we classify expenses. Like something like that is definitely needed for institution level analysis. I think that's a key piece that a lot of people are trying to solve, right? The Thai, Mazari, a lot of these like data platforms, Blockworks are trying to come in and do this. So I think the solution is coming. It's just now a standardization, but at the core, it should really be at the project level to adopt these standards, right? It shouldn't be relying on third-party researchers and platforms to kind of put it together.
Basically, all the DeFi projects should come together and like, listen, this is how we're going to classify revenue. These are the things that qualify. Make some formula, and then just have that as the standard. And then come out with that standard, explain the reasoning, and have docs behind it. And I think that will, help adoption so much.
Agree. I mean, have you guys seen Yearn's quarterly reports? Have you guys seen those things?
No.
I have not.
Yearn actually, bro, kicks out a pretty sweet quarterly report that it kind of highlights their definition of revenue and EBITDA and everything else. But it's a really nice, almost feel like a 10Q equivalent. Obviously, much lighter. But I think something like that is very cool. But also, how many degens really care about it, right? Like, there's also the audience and matching up with the audience, right?
Honestly, it's these reports aren't for the degens; they're for the institutions and more sophisticated players on chain.
Right, but then you would have to wait until the protocol is large enough or sufficiently large to kind of warrant that, right? Because obviously people aren't aping into, the next farm on Arbitrum that's going to launch in a couple of weeks or whatnot. Like that's too early. So where's that sweet spot you guys think when a protocol needs to glow up per se?
Glow up, yeah. What do you think, D24?
Yeah, I don't know. I mean, that's a really good question. I completely agree. Like, I think the last thing we want to do in DeFi is like make it like super rigid, like in the sense of it replicating TradFi, because we are doing something different, right? But like, I do think that there definitely does come a point where, you have scaled and it's like your market, like, sure, you have degens, like, continuing to play in your token, but once institutional capital comes in, there are like protocols that are, well sufficient to like for big institutions and investors to invest into. And it's really hard to say. I mean, I would say, like, at the point that you have a sustainable stream of like revenue and cash flow, and you start like growing that, I guess, and like you actually have a real operating business, it's probably, and like not even just for the degens, I guess, like I'd argue that it would help you plan accordingly too, right? Like actually set some goalposts in the ground and say, like, all right, so this, for the next 12 months we want to focus on this, we want to grow like this product to X and this one to Y, and like focus our efforts here and like hire dev talent to build this out. And then at the end of the year you like look back and say, like, what did we do well here, what could we have done better, and then like have a like longer term plan. And like without that, it's really hard when everyone's just like head down, focused on like the task at hand, and without thinking thinking about the bigger picture. And I just think as the market matures more, that'll become more and more important to kind of gain a competitive advantage, I guess.
Yeah, no, I'm definitely seeing that at MCon a bit. So I'm in Denver right now, and like not just DeFi projects, but like all DAOs. Like, how can they kind of grow up and be more practical? Like, especially now because it's the bear market. In the bull market, you can just do anything. It's like up only, kumbaya, like hell yeah. But like now in the bear market, or like in this like crab market, like you have to like have certain like standards and KPIs. You have to hold people accountable. It's really interesting how like we're kind of relearning these things. And I think the issue and like the trick that we have to, or like basically what we have to overcome is like, how do we not repeat the same mistakes in TradFi, and how can we come up with novel solutions for the on-chain world?
Yeah.
Yeah.
100% agree.
Yeah, but I want to get into like your origin story into DeFi and how you got into Frax. So like, how'd you get into like crypto and DeFi, and then how'd you find Frax?
Yeah, so it's actually funny. So I faded Bitcoin from like 2016 to like I think it was like early 2018. I bought the Pico top of Bitcoin, and then I sold, and I was like, I had said it was a scam forever. I finally decided to buy, and I was like, all right, screw this. I yeah, I missed DeFi summer. And like something I also just do like professionally and like kind of on my own time is just angel investing, like in tech companies and doing VC stuff. And I forget what it was, but it was some like CE5 thing came across my email, and like I didn't appreciate that this entire like crypto had changed from like Bitcoin and a couple of coins to this entire like ecosystem of DeFi apps, and that was probably like Jan of this year, to be honest. And then I just, from there just went down a rabbit hole and like, haven't looked back, to be honest. And then with regards to Frax is like, as I was just getting into like DeFi, researching it, like one of the biggest kind of use cases that I saw was just like stable coins for a number of just like pretty straightforward reasons. Like I mentioned earlier, being able to like send money to anyone, anywhere in the world, like immediately without like costing a ton of money, and just so many use cases, like using permissionless systems to just send $1 to anyone. So within that, I like started like just digging into the various protocols, and with Terra, I mean, I guess one, I was like, I just really didn't want to buy someone else's like 100x plus, and so
Yeah.
like I was like, yeah, and I kind of faded it because of that. But then as I dug deeper, I was like looking at Anchor. I'm like, all right, this thing's going to be insolvent in like 2 months, right? Like there's just no way that they can do this. And then just like the whole, like, I mean, just the vibe that I got, I guess, on CT from like the Terra Army, if you will, I was just like, yeah, this is probably not something that I want to play in at this point. Like, I mean, if you can always get into like something like that, I guess, early and make money on it, but it just felt like the bubble was about to burst, if you will. And then Dai, I thought, was doing like a lot of impressive stuff, but I was like, there has to be like a way to generate $1 versus backing it with like $3 to $4 worth of assets, like to scale at an infinite level. And then like I don't know how like it was that I came across Frax, but then I came across Frax, and like it took me, I mean, to the point I was making earlier, like the docs are like incredibly dense, like it's hard to unpack. Like it took me rereading those like probably like 4 to 5 times, plus asking questions, plus like piecing stuff together and like in multiple sittings. And then it was just like what these guys are doing is just like incredibly impressive. Like, and one of the things that I like really appreciated about it was like the on-chain transparency of everything. So like, they have their collateralization ratio plus their locked liquidity, and like, being able to like sit there and just look at the various AMOs and like the lock times and like do the math and be like, all right, this thing can't possibly depeg, and like, but they're able to get the same they're able to get some level of reflexivity out of this while generating revenues but maintaining their collateral that they can move up and down. I thought was just like a brilliant kind of like mechanism that they put in place. And then kind of the more I learned about Frax, just like how Sam's vision of the Trinity stack, and then ultimately like I guess the Frax roll up and like really owning these $1 trillion markets was just kind of like I think that they're probably like one of the, if not the smartest group of devs, I guess, in DeFi, and just like what they're building. Like I'm super excited to see, and I think once like the market all understands it and appreciates it, I think it's one of those coins that like definitely has some volatility like throughout, but like I'm super bullish on where our Frax is going to be, our FXS, in 3 years.
Hell yeah.
That's right.
Like I love. Yeah, go ahead, Kit.
I was gonna say, like, I feel the same way about Frax, and it has so much going for it. And everybody, I mean, granted, the circle that I speak to is highly biased, but all of us feel like we want to max bid Frax all the time. But FXS cannot catch a bid to save his life, and it's just not a trader coin. And like I feel I don't know if that's a good thing or if if pumping it would cause more people to look at it, therefore they'll dive more into the docs, they'll find the pod, and they'll educate themselves more about it. But I don't know. It feels like the best kept secret in DeFi.
Yeah, I think there's two ways to look at it. Like, one, it's just underappreciated and the market hasn't realized it yet, so it's just like more time to accumulate. But like a second, it's just like, and also it's just like a marathon, not a sprint. Like, you don't want to like hype it up, get too many moon boys, and then it's like a flame. It just crashes and burns. Like, I'd rather take like the long path and like slowly build, like let the DeFi Trinity stack mature and like have it working, and then like when the moon boys quote unquote finally come and like the narrative's a little bit more easier to understand, then it would be like a lot better and more sustainable. So like for like price movement. But also it's just kind of like, it sucks that like, yeah, it can't catch a, in the short term, like,
In the short term.
yeah, it sucks. Yeah, it sucks that like it can't catch a bid, like, and whatnot. I don't know, D2 what are your thoughts?
Yeah, same here, and it's probably our respective circles. But yeah, I think one thing too, I think FXS has super deep liquidity against Frax, which obviously causes less reflexivity, I guess, in the price. But it goes both ways too. But too, like, I think the market doesn't fully grasp it. Like I mentioned earlier, like it takes a lot of work to understand what they're actually doing. Um, and I agree that it is a marathon, not a sprint, and like we will get more time to accumulate. And I do think that like once FRX ETH is live, and I think that will be the product or the catalyst, if you will, that will get Frax more widespread notice, just because like it should be the most kind of like liquid ETH derivative. It should have the highest yields. The ETH stake rate should go up right after the merge. And like if Frax can capture steal market share from like Lido, Rocket Pool, etc., like it should catch that like ETH beta bid that all those coins have caught.
Yeah.
But we'll see, I guess.
There's two things. Like, one, you have to like work to understand Frax. Like most people, pretty much everyone I talk to that's super bullish Frax, like in our circles, they took the time to sit down, look at the docs, research, and they all come to the same conclusion. They all have that aha moment, and I think that's really healthy and necessary when building your community at first, because you want those people that did the work, that came to their own conclusions, and that have those iron hands for years to come. Because that's what, those are the people that are your foundation, and those are the people that will be there through thick and thin. So I think it's like necessary right now. We're kind of in this this like dark, I guess like kind of like dark phase. Dark as in like people don't know yet, but it won't be like this forever. Like stuff like what we're doing at Flywheelpod and other things that will happen, will help get the word out there more. And the second thing is, I agree with you so much I agree wholeheartedly about Frax ETH. I think that will be the catalyst for for FXS to like really gain more momentum and join that cohort of like Lido and Rocket Pool. Because I was talking to somebody, and outside of like the whole curve vote incentives, like the next best thing, or if not like a better thing, possibly more sustainable thing, is Frax ETH, is that native on-chain yield. So it just is. I had an aha moment about that probably like a few months ago.
Yeah, totally. And like I think what's super interesting about not just like FRX ETH, but like just the merge, I guess, if you will, is like I think it'll bring kind of a base yield rate, like it's not like apples to apples completely, but like call it like a equivalent to like a LIBOR rate, if you will, because if you have a higher yield on staked ETH than you can get from borrowing on Aave, you're just going to borrow on Aave and like use that ETH to stake to get the higher yield, until everything is based off of kind of a premium based on the risk profile to that base staking yield. And so I think it's super interesting in a sense, right? Because like Frax, with them building out that Trinity stack, they can, get those deposits that comprise like of ETH, that comprise the staked ETH that like has that base rate that you can then, use as collateral to borrow against or to like lend against, etc., and then just build this ecosystem of yield generating products around that kind of base rate that just benefits the entire FXS ecosystem.
Yeah, it's gonna be dope. It's gonna be dope, like seeing all the different, seeing all the different strategies come out, AMOs come out. Like one thing I hope for in the future, as you know, Frax matures and scales, that it's not only the core team that comes out with AMOs, but other people that come out with AMOs, and think of really creative ones. And I also talked to another friend of mine, Christian, and he had this idea of like, what if you have experimental AMOs? And if they don't perform better than that base rate, they just fold and just everything returns back into that like FRX ETH AMO.
Oh, that's interesting.
Yeah, shout out
Yeah.
Christian from CoinFund.
Yeah, that is. Yeah, there's a lot of cool stuff they can do,
Yeah.
man. It's again, it's coming, but we've been disappointed before, but I really believe like FRX ETH is gonna be like everyone's aha moment, and it's gonna catch a fat bid. Knock on wood.
Yeah, agreed, man. Oh, I also wanted to ask you, D24, like speaking of Frax Lend, Frax ETH, and all these like really up and coming or soon to come products, how did you research and find them and kind of be on top of it? Like, what is your methodology? Plus, you also have like, you know, a quote quote day job too, right? Like what is the secret sauce on your productivity here?
How did you write that thread? Like you broke down Frax Lend before it came out. It was so well written. We actually used it in the Frax Lend episode. Like broke it down tweet by tweet by tweet.
Yeah, I honestly, like, I have like protocols I'm watching, narratives I'm watching. Like with that one thread in particular, I think like what did I do to find that information? Like I think I was like hunting around like the GitHub or something, came across the docs. Like I do that a lot, right? Like there's just so much alpha to be gleaned, like with like open like systems and stuff, and like people will post things to like GitHub repos and like things that aren't public yet, and it takes quite a while for the market to price some of this stuff in, like literally until CT starts talking about it. So it's like, you know, I just like hunt around for like whether it's like a narrative that I think is coming, and just kind of like go, like the way I like to think about things is like, okay, what are upcoming catalysts that like everybody like knows about? Then from those catalysts, like what are narratives that'll come out of those catalysts, right? Like you know, if and then from there, like whether it's like finding protocols or products within protocols that kind of fit those, that's like one approach. And then there's just like a handful of projects I'm just kind of always watching, and then, you know, seeing what like people are like watching, I guess, like different accounts are watching, and then going and just analyzing just stuff on the chain and just in GitHub and stuff like that.
Yeah, and as Kiet asked, like, what kind of method? Oh, yeah, I guess you answered it. Kiet, what was your other parts of that question?
I was thinking about like how does he manage his time across all these different narratives, right? Like he's on Arby, like, you know, with that thread, and also he's on Berachain as well, and also obviously main chain DeFi. Like, what is the productivity like? Could you share a little bit about like your methodology on how you carry about your research? Is there a template you fill out, or how are you tracking all these narratives?
Yeah, man. It's a good question. Like, not a ton of sleep, I guess, since I've gotten into crypto, and like probably less
Welcome to the
productivity at
club.
my day job.
Welcome.
Yeah, like less productivity at work for sure. Hate to say that. And then like, yeah, tracking. Yeah, I mean, I do keep a spreadsheet for sure of like protocols up and coming, like, and then like within that, I kind of try to tag like whether like big picture narratives and then like more granular narratives, I guess. And like, so like right now, like RB for sure is one that I'm watching. Berachain, like you had mentioned, is another upcoming thing that I think is super exciting. I think with the merge, like you're gonna have a whole new like kind of ecosystem of like, or you're gonna have like new MEV types of applications, and like I think you're gonna have like a narrative around like permissionless, like staking stuff, like DVT technology, like making sure like Lido doesn't become too centralized, and there's just going to be a whole kind of application, a whole set of apps that'll come up around that. So I just kind of like to sit back and be like, all right, what is coming that we know about? What is going to change in the market from that? And then from that, like, where do I think that narratives will build, and like just try to figure stuff out early. And like, of course, like you can't like catch everything, and like, you can't control macro and other things that happen in the markets. But I think like just by taking a step back, I do that, and then tracking it and then managing my time. It's like, it's tough. I wish I had the answer to that, man, but I don't.
I mean, we all face that problem. Like, how do we manage our time? Like, I face it all the time as well. I had one last question about Frax, and I definitely want to dive into everything RB and Berachain. But what is advice that you have for Frax? Like,
Yeah, I think like I mean, keep shipping. Like they're like the best group of shippers like I've seen. I think some of the stuff that we had talked about earlier, like I think FXS will be like a marquee coin for like whether it's pensions that come into like, DeFi or larger, TradFi institutions. Like FXS should be a token that they hold in their portfolios. I think that there's just some like, whether it's like, financial reporting or like IR sort of like work streams, like, like creating like a strategic deck, like this is where we're going or whatever. Like, I'm not saying they need to do all this stuff today, but it is something to think about, because like I wouldn't want them to miss out on like the opportunity of like catching those, consistent flows. And like people underestimate like how like if pension funds can allocate like a half a percentage point or less to DeFi, like that means that there are constant flows like in bull and bears, and you don't have these like 80% price swings because they'll need to maintain a certain sort of position, right? Like it's huge. And I think that FXS has a real opportunity to like be like a marquee coin, I guess, in their portfolios. And like there's just probably some, pick and shovel sort of like, business practices stuff that they need to build around that. In addition, but of course, like shipping should be kind of their number one priority.
yeah. Oh, you mentioned something about pension funds and like just the constant flow of capital into markets. Can you explain that further and like how like pension funds work?
Yeah. So like, let's say they say I want to allocate like 1% of this to this asset class. Like, so you have $100 million, right? And like as the markets sell down and that percentage of their portfolio becomes less than their target holdings, they'll like buy more to maintain that percentage. So that's why in like TradFi you don't see the crazy swings that like you see in DeFi. And like if you were to look at Amazon stock, like immediately after their IPO was before there was like a real tech allocation, I guess, in pension funds. Every like 18 months or so, they would swing like 55 to 65% in either direction, because there wasn't consistent capital to say like I want to hold X percentage of my portfolio in tech stocks. So like that's not the only reason there's volatility today, but I think as the market matures there'll be less. But once you have a consistent allocation, I think I think you'll see some of that volatility die down. If that makes sense.
It does. That makes sense how they operate. I honestly, I never knew that. Just living on chain in DeFi, I never realized that's how it works. But like, that seems pretty obvious now.
Yeah,
I mention it.
Dave, I call that the pie chart strategy, because all these endowments, they have a pie chart, and then they dice and slice this pie chart during every quarterly or annual investment committee meeting, and they set whichever percentage they want in each of these buckets. And as the buckets, as D24 said, draw down, well, you kind of have to top it up, right? Because then, the biggest, most concern is when the U.S. equities bucket draw down, because that's a really big percentage. So when they rebalance, they have to like sell everything else just to bring that U.S. equity thing big. That's usually the biggest slice out of these pie chart strategies.
Pie chart strategy and allocation.
Yeah, before we move on to general DeFi, I wanted to ask D24, like, what does success look like for Frax to you?
Yeah, I think it's simple. I think it'll be super high velocity of Frax. I think Frax is the on-chain, the DeFi native stable coin that is used across protocols, across chain in DeFi. And like, eventually, like I know there's a lot of talk around, real world assets, etc. Like, and I think that is an opportunity, but that they probably will go after. But before that, I think it needs to not just be used in like all the farms and whatnot, but just like the highest velocity token or highest velocity stable coin within DeFi that people use as like whether it's their saving stable, their spending stable, and just by that you'll just see like much more usage of the broader FXS ecosystem, I think.
Would you call it needing to be at the center of the flywheel?
Yeah, exactly.
Plug.
Yeah. Plug. I mean, that's how Barry Fried sees Frax as the center of the flywheel, quite literally. So it's good to hear it from two people. But I want to share my screen. I want to open up a D24 thread about everything Arbitrum. And so I want to go through it one by one. You basically listed like your favorite and most exciting projects in your opinion on Arbitrum. So let's get to it.
And just to caveat too, like these are like either new or like pre-launch projects. Like I think there's others like for sure that I'm excited about that have been around, but like these are more things I guess people aren't as focused on.
Yeah. So the first one, which I'm quite familiar with, is STFX. What is STFX and why are you excited about it?
Yeah, so it's a new kind of primitive in DeFi where it's kind of like bringing like asset management, I guess, to DeFi combined with like a social aspect where you create short-term trading funds where groups of traders can all buy into a trading strategy and deploy it. And I think in that this already happens, like copy trading definitely happens. It happens within Telegram groups. People try to all kind of do the same trades. You kind of watch different wallets, traders and whatnot, but like this kind of brings a social like aspect to it in a sense where there will be like leaderboards. You can kind of like pick your kind of best traders, if you will. And I think it's just going to be like a new place that people, I guess, like hang out, trade, post ideas, and it has like the opportunity to just become like super viral, if you will. If that makes sense.
No, 100%. So a little bit of background on STFX. The person who started it, Mustap Murad, is an OG Bitcoiner from last cycle. Like one of the best writers from last cycle. He was definitely MIA this cycle for 2 years between that Black Thursday in 2020 and now, but he came out with STFX, and there's definitely a good amount of OG Bitcoiners behind it, as well as a lot of CT Anons. One of them is my good friend Peach, who's a part of WAGMI Planet, and how Peach views it, how Peach views trading and STFX is this idea of having the hot ball of alpha, which is basically there's an Anon who's low in follower count, who's hungry, who's looking in the places where no one else is looking, and he has the alpha, and he's able to share it with his community and share it with his group of people. This is how Peach's WAGMI Planet really came about. And so it's basically taking like this idea of the hot ball of alpha and kind of putting it into a social protocol like STFX. And so I'm actually quite excited about it as well. I'm excited to see where it goes, and I think they definitely have the right people on the team getting it going.
Yeah, for sure. Another thing, if you look at Murad's like Twitter, he called the Pico bottom. I mean, well, we don't know if it will be the bottom of this cycle, but like the bottom, I guess, in June or July of Bitcoin, and was like, I'm going big here, and I think it's been the bottom so far this cycle, which is interesting, I guess.
What was the price of that again?
I don't remember.
It's 18K. I'm looking at it right now. Like 18K.
We'll see.
Yeah. I'm not. By the way, I'm not advocating that that'll be the bottom, but so far it looks to be a good trade.
Yeah. Next up, we got Y2K Finance. So, what made you pick this one? What are your thoughts? What is it? What are your thoughts about it?
Yeah. So, like, kind of as mentioned earlier, stable coins, huge market. You saw like what happened with Terra, etc., and like you're seeing a lot of protocol native stablecoins come out, like with Aave, Curve, I'm sure others, as they're seeing kind of the value accrual from that, from developing your own. And so what Y2K is creates these insurance vaults effectively to insure against depegging events on stables. And I think they'll also go into like other wrapped tokens. And I think like as there's more cross-chain stuff, you're just going to see more and more wrappers. So I think it's a huge TAM and like a huge market to go after. And if done right, super interesting. And then like they're also creating like an order book, so you can like, because the vaults are like epics, so you can say like, I want to insure during this period, and say there's like, you know, a DPEG, and you want to kind of sell that to somebody else, or someone wants to buy that risk or take the other side. They're creating an order book, and then on chain like a CDO product, I think. So I just think it's interesting, and if done correctly, it should be a pretty massive market in my opinion.
Nice. Kiet, what are your thoughts on that?
I mean, I'm still on the STFX, because I have a buddy who's built like a kind of a whole platform on social trading, but his limitation was that it was only on centralized exchanges and all these like paid trading groups, but nothing on the on-chain deck side. And mixing that with social, and obviously CT is all about narratives and all about daisy chaining, like the next person. Literally, Nonsense built a whole business around that, right? So,
yeah, literally,
it's cool to see that they're bringing that on chain. But I'm actually more curious about the next project, like Rage Trade. Like I see this around a lot, I hear this around a lot, but I'd love to learn about it directly from you, D24.
Yeah, so it's interesting, right? It's like what they're doing is kind of like a novel approach to like it's an omnichain ETH perps platform. So what they're doing is they're leveraging liquidity from other LP tokens. So starting out, I think it's like Try Crypto, like the CRV vault with Bitcoin, ETH, and I think USDC. And you know they are using Uni v3 mechanics such that you deposit those LP tokens into their vault, and then they utilize 20% of that liquidity for their ETH perp. The 80% sits on like the LP token, and that's constantly rebalancing. So they're recycling liquidity from protocols that are across any layer 0 compatible chain, and then using that to have what they envision is kind of the deepest on-chain liquidity for ETH perp, so that you can have funding rates competitive with centralized exchanges. So I think it's just like super interesting in the sense that like you can, you know, build on liquidity that exists, getting, you know, depositors better yield across chains, and like do that to like get super deep liquidity for ETH perps. And then like I think it enables like, it's kind of like an interesting base layer that you can build on top of to create some super interesting vaults using their kind of recycled liquidity mechanism, if you will.
Yeah, I find it interesting how much more and more Uni v3 is being used as a primitive for all these derivatives, whether they're ETH perps, options. That seems to be one of, if not the main use case of projects building on top of Uni v3.
Okay, so I'm trying to wrap my head around this. Is this basically Uni v3 bands, but then it allows you to trade ETH perps with the underlying instead of, say, like ETH USDC?
So, and I mean, don't quote me on all this. Like, I could definitely be not exactly right for sure. But like, so it's a Uni v3 band in the sense it creates 80% of the liquidity. So if you deposit your Curve Try Crypto token, 80% of that liquidity like is not deposited, I guess, into the ETH perp. 20% of that liquidity is used for the perpetual liquidity, and then they constantly will balance that out to maintain that 80-20 percentage, I guess. And then so they're able to use liquidity, and then they're also going to build like a GLP vault and like other vaults, and then so they're leveraging liquidity from these LP tokens to deepen this perp liquidity, if you will, if that makes sense.
Okay, got it.
Nice. We like the capital efficiency. Next up, we got DAMM Finance, which is I'm personally excited for because I've talked to the team a few times. We've actually had them on a Twitter space a few months ago. Can you explain what DAMM Finance is and what you like about it?
Yeah, so it's like it's an institutional they do under collateralized today. They do under collateralized lending of altcoins to delta neutral market makers. And what's interesting about that is and everything is transparent. So I think they partner with X Margin to monitor a market maker's net long short position in that token. It's interesting because to date, a lot of lending is over collateralized, and that's just not efficient. But you see you saw with 3AC what happened when stuff wasn't when under collateralized lending happened that wasn't done transparently, I guess. So I think that is very interesting. And then also it's interesting for a token issuer because today, for token issuers to lend to market makers, I think there was a discussion around this in the FXS chat yesterday, actually, to lend to market makers to get listed on a centralized exchange. The market makers kind of have a monopoly on these altcoins, so they'll give them really crappy terms, to be honest, where they're forcing them to give them a call option or paid some retainer, and it's just they get screwed, candidly. And this enables a fair market for market makers to borrow these coins to get access to that, so that and then the token issuer gets a yield from that, plus they deepen the liquidity of their token, and then all this stuff's done transparently. So if a market maker were to do that and have a super over weighted short position, there would be you would be able to see that in theory, and bump the interest rate or call the loan or do whatever. So I just think it's a pretty interesting primitive.
Yeah, that's definitely huge, especially for Frax. I'd love to see this be the way that Frax deepens liquidity on both indexes and possibly sexes.
Yeah, I agree. And I think it could kind of change how market makers work, I guess, with altcoins. And I think that there's a pretty large opportunity.
I concur. And next up, we got Contango. So I haven't heard of this one. What's Contango?
Yeah, so perps today are just obviously they're perpetual contracts. Contango is just a dated futures contract, so it has an expiration date, if you will. And again, it was just kind of what I was mentioning earlier with the fixed lending stuff. It's just it's a pretty large market on centralized exchanges. There's no sort of fixed futures contracts platforms in DeFi today. And if you look at how massive the perps market is, there's no reason that the same shouldn't be said for fixed term sort of futures. And I mean, to be totally honest, I haven't gone super deep on them. I don't know. I think they work with Yield Protocol using their fixed rate loans on tokens, but I'm not too sure on the mechanics of how it all works.
One to keep an eye on. It's interesting. They're the only expirable one, it looks like.
Yeah, and I mean, people like perps because they're easy, but this shouldn't be that much more difficult. It's not super complex like an option, but it just has an expiration date. So it's it's the first primitive on chain. All the centralized exchanges offer it, so it's definitely one to watch, I think.
I mean, I just want to make a quick commentary. I love how DeFi has really blown up across the board, because this is no longer your pick your favorite food emoji farm that's just a Uniswap v2 fork and just replicated everywhere. These are some really complex stuff that they're shipping out now. It's come a long way.
Yeah, honestly, kudos to DeFi and big ups to Arbitrum for being the playing field that all these different protocols are building on. That says a lot about Arbitrum as a roll-up as a whole. And then next up, we got Gumball protocol. So what do you like about Gumball over here?
Yeah, it's like an NFT. Just generally, like I'm pretty bullish on like NFT Fi. I guess like to date, it just the a lot of the lending stuff has been. There hasn't been primitives, I guess, built around like building liquidity, deeper liquidity behind NFTs to enable like a sort of ecosystem of DeFi like type of apps that sit on top of it. Gumball is like effectively allows NFT projects to launch with a corresponding ERC20 token that are sold on a bonding curve. Which then acts as like the liquidity for that collection. And then from there, you can think about like all of the primitives that can be built kind of on top or around it because you have liquidity behind these NFTs. So it should be a lot easier to lend, like borrow against them, etc. And you just get like a lot more utility out of your NFTs.
Well, so it wraps the NFTs in ERC20 and then puts it on a bonding curve, and this makes it easier for lending and for different composable activities.
Yeah, it's like for like new projects, I guess, to launch. Yes, yeah, that's right, right. And then you have like deeper liquidity behind the NFT. So
Yeah.
it's kind of interesting, I think.
How does this compare to something like SudoSwap? Because SudoSwap is basically like the unwrapped version of it. SudoSwap like leaves it as an NFT, right?
Yeah, it's a good question. I mean, like I think we'll see how Gumball actually works in practice. I think with SudoSwap, like new projects haven't really figured out, I guess, like how to keep a market because like what we've seen with a lot of the launches on Sudo is like they don't keep the pool balanced and like the projects just get dumped on in the pool and like a lot of the new launches just quickly go to zero as like people buy a bunch and then so I don't know. We'll see kind of I think how it all like plays out and like a lot of these things are like totally novel. Like another one is like Abacus that I'm pretty excited about. And they do what they're doing is like creating these spot pools where it creates their own appraisal system for NFTs. So say you have like a bunch of punks and like you can create a pool where people will say I think like you can buy different tranches of the punk, so 1 to 2 ETH, 2 to 3, and you say like what you think the NFT is worth, and that liquidity is locked for a certain amount of time. And then the holder of the NFT, once they turn on one of those spot pools, can say, I want to sell this punk. And if like, let's say the pool is up to, whatever, 65 ETH, they're guaranteed at least 65. They get that 65 ETH. And if the NFT gets auctioned and it's sold for less than that, the higher tranches get slashed, if you will. But the owner keeps the NFT, and if it's more than that, the higher tranche depositors get like a larger share of the profits from that. So like it creates like locked liquidity behind NFTs, and then from that, like you can create a lot more efficient lending and stuff. So
Yeah, NFT DeFi. It's going to be NFTs and DeFi will be interesting to see how it evolves and which projects are able to marry the two most elegantly.
yeah, I mean, because like you have like people that minted apes or punks or whatever, and like the majority of their net worth is in like 2 JPEGs, and they don't want to give them up, but like
Yeah.
they get like they can't borrow, like they get no utility out of it. Or what happens is like you borrow against them, and it's pretty easy for like a death spiral to happen because they're based on floor price on OpenSea, which if you're a whale, you can easily manipulate that, and then like if you manipulate that floor price, then NFTs go up for then if they're getting liquidated, they go up for auction, then there's no buyers, and then it causes kind of like a cascading effect, and that's kind of been the issue so far.
Interesting. Yeah, I agree with that observation. Next up is Split Finance. What is Split and what do you like about it? Oh, they have custom RPC functionality. That's pretty cool.
Yeah, so they're pretty new. There's not much out on them, I don't believe, but like they're gonna be like an on-chain aggregator. But what they're going to do is like they're going to like have MEV protection, MEV profit sharing, and other sort of custom RPC functionality. And like again, I just think like the MEV opportunity is huge here, and like to be able to like aggregate across chains and optimize for MEV, like I
Yeah.
think is going to be massive.
Oh yeah, I agree, especially post merge and all all the madness that's gonna happen over there.
Yeah, it's going to be wild, man. And then it's like after that, I think it's going to be like cross chain MEV, and there's just going to be like the whole supply chain. I think that
Yeah.
you'll see like new apps kind of becoming to get developed, I guess.
Cross
You know?
chain MEV is crazy. That's not talked about enough.
Yeah, yeah, I agree. But it's going to be like pretty prevalent in ETH if you think about it, right? Because like you're going to have all these different roll-ups, and like that's going to be like as they all settle to mainnet, it's going to be something that matters, I guess, right?
Yeah, 100%.
Man, I feel
So-
like
Oh, go
these
ahead.
like omni-chain decks and bridges. Like I remember, I think Sam K said this in the last pod. It was like the two taboo words right now are algo stable and cross-chain bridges. And then whenever I see that omni-chain, I get a little like PTSD just seeing these things.
Yeah.
Yeah.
I don't disagree. I don't think I think it's a problem that like somebody will solve. Just hasn't happened yet. But also like it also relates to like across rollups too, right? Where you can
Yeah.
like maintain the security from ETH. But I agree. It's scary, right?
Yeah.
Yeah. I mean, both both parts of Web3 or DeFi, whether it's bridges or algo stables, are at the cutting edge of their respective niches. And when you're at the cutting edge, you're gonna bleed a little bit.
Oh,
You know what
nice.
I mean? Yeah. So like you're gonna get some scars, but it's like those scars that build you and build character.
For sure, man. It's just like it's just what happens when you're like, yeah, exactly like you said, at the bleeding edge and innovating. You have to like test bounds and then like have people challenge you. Otherwise, like you're just gonna like maintain like the status quo, you know?
Yeah, and I like to say that all of us are in beta, whether we like it or not. And when we want, and before the real big money comes in on a consistent basis, we need to basically beta test ourselves with all the different experiments, testing the limits, what works, what doesn't work, what's safe, what's not safe. And we're still in that early adoption phase.
For sure. And I think like to that point, like I think it's like important for projects to like have that open discussion versus like maxis like jumping down your throat when you like test certain things, right? Because like we've seen how that plays out. I don't know how many times we need to learn, right? But I think that's gonna be that's important because you have to like test limits to like build this super innovative stuff.
What do you mean, maxis? Like,
Well,
down your throat?
like I mean, your guys' recent flywheel around the GLP stuff, right?
Oh
I know,
yeah.
and then I saw some tweets around that, and like people were getting offended. And I'm not
Yes.
saying one thing or another around GMX. Like I've had a GMX bag for a long time, but like I think like when if there are people challenging, I think a lot of times it is healthy discussion. Like, of course, you don't want like someone just like saying stuff to create FUD, but I think it's important to like engage in those discussions.
Yeah, I was gonna ask you, like, what are your thoughts on the GLP comments from that episode?
Yeah, I think um, it's not as easy as I think it was described because there are caps on what you can do. I think to say it's impossible for that scenario to play out is probably false because it definitely could happen. Like I believe that the caps are in place kind of before trades are issued, and like let's say you have like a net long or short position. I don't know if withdrawals are restricted or not, but also I think that there are a
DT4, we
bunch
can't
of
hear you.
protocols building on GLP liquidity which creates the
Wait,
consistent demand. Sorry,
DT4, you
yeah.
cut out. Yeah, you cut out for like a 10-second span there. So the last thing I heard was it was presented simpler in a simpler way than you thought warranted justice, and the caps are there, but you said it's not impossible to happen.
Oh yeah, no, I just don't think it's as easy, I guess,
Yeah.
for like a bank run as it was described, because I think you can only there are caps in place around max trades and net short and long positions that one can take. I do believe, and I don't quote me on this, that it may be possible that if long and short positions were placed, I don't know that they lock that liquidity. Like let's say like there were a bunch of withdraw or like a bunch of people were withdrawing from GLP. If they lock that liquidity in, but there's also a whole ecosystem of protocols building on GLP liquidity, which will create consistent demand for GLP. So I think the more demand for GLP that you have, more protocols building on GLP, you mitigate the risk of that
Yeah,
scenario.
like umami.
Um, yeah, Umami, like Plutus. There's others like that are coming out too. So I think Rage Trade is going to have a GLP vault, and
Hmm.
so with all that, you're just going to have consistent like deposits of GLP, people minting it. It may be locked into like these various vaults, and with that, I think that risk gets mitigated.
Yeah, that makes sense, having that consistent demand for GLP. And kudos, honestly, to GMX for building a protocol that so many other protocols build on top of.
Totally. And the last point I'd make is like I think synths and like their new VAM like BAMM model will also mitigate that to some extent. But yeah, GMX I think is like they've become like a critical DeFi building block, especially in Arbitrum.
Yeah,
Yeah, and it's super exciting to see like all these projects building on top of them.
yeah, that for sure. And there's not enough really spot liquidity on Arbitrum yet, and so GMX is like one of the few venues where you can get a good price on things.
For
Uh,
sure. 100%.
D24. Speaking of projects on Arbitrum, I'd like to hear your thoughts on like Vesta Finance. What do you think about those guys? Because I know they come up with
Yeah.
GLP collateral like soon-ish.
Yeah, I'm not like super deep on them, but I think it I think they're very unique in the sense that there's unique collateral types, and like they kind of, invested in my opinion in the
Mm-hmm.
right ecosystem, right? Like to be in the Arbitrum ecosystem and have GLP collateral, to have, I think like DopeX collateral, GMX collateral, like that ecosystem of RB apps is like
Hmm.
super interesting in my
Mm-hmm.
opinion. Um, and I think they have a V2 coming out. I'm not all that
They
familiar
do.
with.
They
They
hinted it
do.
on our episode.
Yeah.
Yeah, so like in that regard, I think it's like very interesting. I think it's becoming proven that like the CDP model is not the most efficient per se. But I think getting that type of collateral in your system and like working with those protocols, there's like a lot of interesting stuff that they can do.
Yeah, and they also just started to collab with Mover to bring a real life card. You can spend. I'm not sure the details of it, but you can spend your Vesta or your yield or in the real world with the Mover card. I know they just announced that. Are you guys familiar with that collaboration?
Uh-uh. That's
No.
interesting though.
Yeah. No, I'd love to see that with Frax and Fraxland. Like have like a Frax card to use in the real world one day.
Dude, that's sick. Yeah, no, I hadn't seen that.
Yeah. Next up, we have Vertex. I love what you said here. They got Do Kwon, but they pivoted to Arbitrum.
Yeah, so they were building on Terra. It's just like a full on-chain order book that's going to offer like derivatives, spot trading perps, and a whole host of products. I actually think they came out with their light paper last night, and like I haven't looked at it, but
Ooh.
so I need to do that. But yeah, it sound. I mean, there really is no kind of like order book. I don't know if zigzags. I think actually zigzags on Arbitrum.
Yeah.
But like I don't know. They seem to have an ambitious like long term roadmap. I'm just like to be honest, I'm not familiar with the details since I haven't looked at that doc. But
Hmm.
they've been building a while. They've been building to ship on Arbitrum since like I guess May or so. So
May. Oof. Oh wait,
Yeah.
Arbitrum. Yeah, that makes sense. Fucking.
Because yeah, and like I think their vision is like, all right, you can do all this stuff in an easy way, like on FTX, Binance, and those other platforms. Like there needs to be like a one-stop kind of fully integrated order book that's on chain where you can do all the same stuff. And I think that's kind of their vision.
Yeah, I agree. Like there'd definitely be a venue for all those fun things. Next up, we got NFT Perp. Like you said, pretty self-explanatory there.
Yeah, yeah. So just like a perps platform for NFTs, so you can like which is interesting in the sense that like if you can't afford like a big collection, you can go like long, short on different NFTs and like and or if like you're going into a mint, like you can like hedge or you want to like hold like some NFT through reveal, you can hedge. But yeah, so I just it's kind of a just like a new primitive for NFTs. I know Tracer was talking about like being able to bring perps on chain or NFT perps into Tracer with their perpetual pools. But yeah, that's just kind of what they're doing.
Yeah, I think that's super useful, especially for seasoned NFT traders and holders.
Yeah, yeah. And like personally, like I'm not like a NFT trader like at all.
Hmm.
I've lost money like on every NFT I've ever bought probably, but
The DeFi curse.
yeah, no kidding. But I do think like, and there's no reason that like you shouldn't have like liquidity and like utility behind this stuff and create apps that sit on top of them. It just needs to be done correctly. And I think once that happens, like the reason like I'm excited about it is like I think NFTs are more top of the funnel for retail than DeFi.
Oh,
So you like bring
100%.
in all these people, then they start using DeFi without even knowing they're using DeFi, and like that's our next billion users, you know?
Yeah. No, I couldn't agree more with that. Like NFTs and DAOs are the top of the funnel. And then slowly they use like different tools and the best scenario would be they're using these tools and they don't even realize what they are.
Yep, exactly.
And this last one, which I find really interesting, is Excalibur. Excalibur 69, a solidly dex. This will be the third solidly dex I've seen. And I'm curious, like, what are your thoughts on this? Are they going to do anything different from the previous solidly decks? Like, you had the original one, then Velo made some adjustments. Has Excalibur made any adjustments?
Yeah, they've made some adjustments to like the mechanics, and they also like, I mean, they have a very ambitious roadmap. They've got a large team. Like they want to bring like liquidation lists, borrow lending to like their decks, and a number of other things. And yeah, I mean, I think like it'll be interesting to see because I agree there are a couple solidly dexes launching on Arbitrum, but like the one that launches like in time for Odyssey and or the token launch, like just looking at what like happened with Velodrome, like I think is like there's really like no degen dex on Arbitrum today.
Yeah.
So like I think that there's just like a huge opportunity for someone to like
Yeah.
take that spot
I
if you
see.
will.
I see why you have it at like the bottom of the thread. That's where the real alpha is with this solidly dex.
Yeah, the what, the 9 million FTV or just
Both in general, honestly.
oh, yeah.
Like the fact that it's 9 million FTV, and you saw what happened. I mean, you saw what happened in Velodrome, and you saw what happened with solidly for a sec. But like, I guess I was gonna say what my question is like, how do you make a solidly dex sustainable?
Yeah, it's a good question. I'm not sure that I'm bullish on that, to be honest. Being able to make it sustainable long term, like with the current models.
Yeah. Did you see it?
Like
Like, yeah, go ahead.
no, I mean I think it is inherently a dex. It is inherently like a model that pumps off the bat.
Hmm.
I'm not convinced yet unless it becomes like a massive hub for liquidity on that chain where all the trades happen where the token is worth so much that like I'm not sure that it is a super sustainable model. Like I'm not I'm personally not incredibly bullish like long term on solidly dexes, but that's like very different than saying like, out the gates like I think that
Yeah.
it could be some pretty interesting price action.
Yeah, and it'll be interesting to see if Excalibur augments off that solidly DEX model, if they do anything different, make any changes, similar in the spirit of how Umami went from being an ohm fork to a real yield protocol.
And
Yeah.
guys, remind me again, is the Solidly Dex the VE33 thing, or
Yes.
is that just a new rebrand? They just call it Solidly now as the.
It is the VE33 thing, so yes.
Got it. Okay.
Yeah.
Interesting.
Andre's last gift to us before he pieced.
Awesome.
And then we have a few extras here. We have a Gamma Swap and Finance Liquid. So let's get into Gamma Swap. Like, what do you think? An Oracle free DEX. Wow. Okay. I'm super interested in anything that's Oracle free or Oracle-less. That's probably like one of the things I look for the most in like any type of DeFi protocol, and if it can like actually pull it off. So like, what's your thinking here with Gamma Swap?
Yeah, what they do is so like this is kind of confusing to walk through, I guess.
Let's do it. Let's try.
Like when you're an LP in a DEX, you're effectively like buying a put option, right? Like on that price with you don't have the same like upside though, payout. So they are taking LP deposits from like Uni V3, and they're just like enabling like this, they're replicating the same payout as if you were buying an option. So said like another way, what they're trying to solve against is like hedging for impermanent loss for LPs in Uni V3 effectively.
Okay.
And so they get the price, and then yeah.
Okay. I like to call any type of LP. I feel like the term automated market maker is like misleading. They're really automated market takers because they're constantly taking, and the arbitrageurs are the ones trading. It's kind of flipped around from sexes. And so, and like any way that helps mitigate that, I think is useful. And but the thing is, will like retail like understand it? This will probably be a thing used by market makers and more sophisticated traders.
Yeah, I agree. Like it's like it affect like like gamma and an option is like the rate of change. Like with like it's one of the Greeks in an option, the rate of change with an option. So like how the rate of change between the pair or whatever. So it effectively enables the gamma swap enables you to go like long or short gamma within like that LP pair. And so, yeah, I think it's probably going to be too complex for like your average retail user, but I think it could be an interesting like integration with other protocols or for market makers to kind of use.
Yeah, for sure.
And I guarantee you guys, someone's going to come out with a vault where you just deposit your Uni V3 NFT and then they'll do this for you, right? It's like instead of moving your range and your band, they'll also manage your gamma for you. Like,
Yeah, that's basically what Panoptic's gonna do.
yeah.
Who is that?
Panoptic.
I haven't heard of one.
So Panoptic, they're building an option protocol that uses Uniswap v3 as the options primitive, like as like the base, and they're building smart contracts around it. So build a whole options protocol with the idea that Uni v3 is an options protocol. It just needs to be like managed in a certain way, and you'll be able to take like 5x leverage on your positions. It's pretty cool. The founders of it are Cornell PhDs, and one of the guys, I can't pronounce his name. I don't want to mess it up. It starts with a G. I can't pronounce it, but he's been writing some really good threads about Uni v3 in general and how it could be used as an option. I forget how. I'm gonna budget, but Panoptic. That's the name. Gaim. Thank you. Gaim. I wish my French was better.
Yeah, that's interesting.
Yeah.
I'm surprised like there's not more like Uni V3 vaults, to be honest. Like,
Yeah, there are. I think it's just hard to build around, or like, I think it's just hard to build around and manage because, you saw last year in 2021, a lot of them got hacked or exploited, and we were still in the figuring out phase of like how to use Uni v3 effectively because it was such a novel primitive that it needed to be tested out over a period of time. And once it got tested out, it was like, okay, now this is like how it's used, this is the nature of it, this is how we can build around it, and this and that. And like the most popular ones, vaults I know right now are Arrakis and Gamma strategies.
Interesting. Yeah, no, something to keep an eye out for sure.
Yeah. And the last thing, we got Finance Liquid, and as Mr. Rec Gem says, this man does not miss.
Well, I posted about Finance Liquid before their launch, and then like I forget what happened. I forgot to ape, and like I don't know, it just did a ridiculous number of X's. So I was like glad I didn't take my own advice. But yeah, what do? They harvest like MEV opportunities from like liquidity pools. By like they create like a liquid derivative of ETH. And use a fractional reserve model, kind of like Frax. With that fractional reserve model, they create a liquidity pool against that LQ ETH that they can like build with protocol owned liquidity, and like they'll continually take profits from like arbitrage opportunities between pricing discrepancies and return that to stakers, I believe.
Whoa, that's really cool. Like that seems quite. I can't believe all this stuff's being built on Arbitrum, but it makes sense that it is being, all this stuff is built on a roll up. This is like what Ethereum wanted to see.
Dude, yeah. I think that's right, man. I think that's right. But it's like if you compare Arbitrum to like what's happening on like mainnet or elsewhere today, it's like kind of mind blowing, right? And like
Yeah.
think about what's gonna happen when a token comes.
Exactly. I was just talking to my friend at another protocol who, really keeps track of the chains and all the different chains, and he said that I'm gonna actually close this right now. Thank you. He said that the three most are actually the four most used chains. So obviously mainnet is the king, and the three most used side chains are Arbitrum, as we went over here, Polygon, which has essentially built itself up as like the both Ethereum testnet in my opinion, and also getting like a lot of major brands and more like Web 2 traditional companies into Web 3. And then the last thing, which is kind of its own island, is actually BSC, Binance Smart Chain. That has really captured a lot of the Asia market. That has really captured a lot of Binance users around the world. It makes sense because Binance is, is like a key point of entry for many users, and then they can just easily go to BSC from there. CZ has stated that he wants Binance to be all on chain within 5 to 10 years. So those are the three side chains other than ETH that are the taking the W right now.
Yeah, it's interesting. Yeah, with Polygon, it's just like they have such impressive BD, right? It's like crazy, just like partnership after partnership. And it begs this question: will the best tech win, or will it be like the best BD, right? Like, because like tech will always evolve, and like you can like update things. Like, I don't know. It'll be interesting to see it play out.
You're seeing both right now. Like Polygon has great BD, but Arbitrum has great tech, and they've also marketed themselves and phrased themselves in the right way to developers and builders.
Yeah, and now it's just like the benefit of the ecosystem, and then the TVL that is attracted to the chain. Like, if you wanted to build on a roll up, like, do you want to go where the liquidity and TVL is, or elsewhere? I guess.
Yeah, talk about a flywheel.
Yeah.
Yeah.
I had a buddy who's very similar. He kind of tracks the chain too, but he told me this kind of interesting observation where he says if there's a UniV3 or UniV3 fork of that on any chain, and you track that volume, and if you notice that the TVL on that volume is very low, then that's a sign that this chain is not that sophisticated. That means there are a lot more retail people on here. So it's kind of like, easy mode versus hard mode. And now when I see Arbitrum kind of, taking the quote bear side, I would be like, man, there's a lot of sophisticated things being built on Arbitrum. That means all the players here are going to be super sophisticated. So then when you PvP, you're playing on like, extra God of War mode. So
a lot of DeFi native players, honestly. I think that's what makes Arbitrum unique. It's like you have people, gain experience, gain XP during DeFi summer and during, all the different chain cycles and whatnot. And now they're building products for DeFi on Arbitrum.
Right.
Yeah, for sure.
Yeah.
Totally agree.
And other than Arbitrum, there may be a fifth chain to join our 4 other chains. One that you're very excited about, one I've been hearing a lot about for several months now, which is Berachain. Berachain I've looked into a bit. It's a Cosmos, how I'm familiar with it, it's a Cosmos chain that uses proof of liquidity. It's really based off of synthetic assets and synthetic assets or wrapped assets. You can go into it. Can you explain what makes Berachain unique and novel, and why are you bullish on Berachain?
Yeah, for sure. So what it is with proof of liquidity, there will be different assets you can stake into consensus vaults, such as ETH, Bitcoin, Bera, stable coins, etc. When you stake those assets into the consensus vaults, you get a liquid a version of it that you can swap into other consensus assets. You can use as collateral to borrow against and do a bunch of other things on the chain. And then what happens when you deposit those assets into the consensus vaults, they're paired with Honey, the chain's native stable coin. And so your stakers are contributing to the security of the chain, the liquidity of the chain, and they're free to kind of do all of their different DeFi things on the native L1. And then as an L1, they've also integrated Croc Swap, and they'll have an L1 native DEX. And then they will also have a perpetuals exchange. And what they do when they pair your staked asset. So if I deposit ETH and in return, I get some share of Bera emissions based on my staked ETH. And then if I wanted to take that, unstake that Bera, I can get the same amount of ETH back. And given they have the perpetuals exchange and the native DEX built into the L1 mechanism, they hedge they allegedly hedge all of the IL with perpetuals positions, and then all of the fees that are accumulated from the various products on the L1 itself, all are returned to Bera stakers. And then there's a third token in the ecosystem called BGT, which is kind of I don't know if you're familiar with Platypus on Avalanche or Hummus on Metis, but it's it accumulates over time. It's non-transferable, non-saleable. So their governance token just accumulates over time. If you unstake, you lose that. But your share of BGT will dictate your share of the Honey emissions, which are stable coin emissions. So they're building, long story short is they're building a chain where, they should develop super deep liquidity because you when you stake, you can do anything with staked assets that you could do otherwise. Plus, they have this native DeFi infrastructure built into the L1 that will accumulate fees for the chain and for stakers. So I think it's a totally new primitive. And as new projects that launch on Bera, you can tap into that chain's liquidity. Pair with that liquidity, you can become a consensus asset. And so if you think about the opportunities when you have super deep liquidity like that, they're kind of endless. And you can think about the flywheel that kicks off if you have different consensus gauges and hidden hand is coming to the chain and you want to bribe people to be a consensus asset on the chain. And I think what you've also seen aside from the mechanics on the chain, I guess, is they started with NFTs. They created a great ecosystem. There's been a ton of hype. There's 50,000 people or something in the Discord already. The chain won't be live for I don't know, until early 23. And I can probably think of 30 plus projects I know of that are already building there. You have a ton of stuff. Most of the time you go to a new L1, there's not much to do. With this, it's you have all of this native DeFi infrastructure built into the chain that'll print real yield and like actual fees. And then the other thing that's kind of interesting is Synapse is going to be their canonical bridge. And if you think about SynChain, and if SynChain becomes larger, Berachain will kind of be like a new liquidity primitive almost, right? Because like if you have that super deep liquidity, if for any cross-chain swaps that end up happening, Berachain would be like the liquidity layer to get the deepest liquidity, lowest slippage on large trades, because you have all of that liquidity backing the security of your chain.
So, wow, that's impressive. I was gonna ask, like, when people stake their ETH for, is it they stake it for consensus, or do they stake it for Bera, or like what'd you say before?
Yeah, so like, so Bera, I think the inflation is like 10% a year. You stake your ETH, you get that inflation in
Is
Bera
it native
token.
ETH? Like, where do they stake it?
I think it'll be wrapped ETH.
It will be wrapped ETH. Okay.
Yeah.
And so like you would have to bridge your ETH, or no, you would
Via
have to,
Synapse.
yeah, via Synapse. Okay.
So I think they're going to have a mix of like L1 tokens. Bera is obviously an asset that you can stake, and then stable coins in their own Honey, which is their stable coin. So you stake that. Then once it's staked, like say you're like long ETH, then you decide like, you think there's going to be a sell-off, you want to be swapping to stables. You don't need to unstake your ETH. Like you can swap that staked ETH into swapped USDC or swap or into staked USDC or staked Honey, and like swap into stables while that remains staked. Or you can use that staked ETH as collateral to borrow against, or in a purpose exchange while they hedge kind of that exposure. And like they can build like they're leveraging like Honey's going to be over collateralized, but they're leveraging like the same AMO mechanism that Frax has in terms of like Honey, and like building that into the native L1 in terms of like minting or burning Honey into like these various pairs plus hedging that exposure. And like I think that's why they built on Cosmos, is it just gave them a lot more like functionality around the mechanics they could build into the native L1 that you couldn't just do on Solidity. So I think that like it's a no question a tall feat, but if they're able to like figure this out and make it work, I think it's like a whole new like I said, primitive for DeFi, to be honest.
Oh, got it. And D24, let me make sure that I get it, and also for the benefit of the listener at home here, let's walk me through the user journey of, I'm gonna walk you through it and hear if I'm correct. I have ETH on ETH main chain. I bridge over via Synapse. Then once I'm on Berachain, I have to stake that ETH, and I would have a liquid staking, in return, where it's called Bera ETH, for the example's sake. And then this Bera ETH, I can do whatever it is that I want to do on chain, whether it be collateralizing it and borrowing some Honey, or I can, collateralize it in their perp exchange and trades on the perps. But I would have this Bera ETH, and I can take this Bera ETH can I also then stake that Bera ETH to earn Bera tokens, which is the native token of the chain?
Yeah, so just to like clarify, you stake your ETH, you get your, I believe you get your Bera ETH. I don't know exactly if you get a liquid version or how it works, but I don't think you can use it for anything on the chain. But since they have like an L1 native DEX, L1 native perps platform, like there are, and I could be wrong about this, like this is my understanding of it, like you can use it for those applications that are built into the native L1. I don't think you can go and do any, like if you want to swap it, you can only swap it for other consensus vault assets. And you don't have to stake that ETH for what it's worth, right? Like you can bring ETH onto the chain and do whatever you want with that ETH.
Okay.
But if you wanted to stake it for consensus, for emissions, that's kind of like what you're able to do. And when you stake it, you get Bera emissions effectively. And then if you stake that Bera, you get Bera emissions, plus you get a share of the fees of the native like DeFi stuff that is built into the L1 in terms of a stable coin.
Understand. And how does Honey play into the effect?
So all of the fees of like on CrocSwap, on the Perps platform, those are all printed in Honey. Plus when you stake if you want to stake your ETH into the consensus vaults, that ETH is paired with Honey in their native DEX. So all of these consensus assets will be paired against Honey, and that exposure, that IL exposure, is then hedged out via their perp, and all of this stuff that happens in their native DEX and perps product, all prints fees in Honey for Bera stakers.
Got it.
Of a flywheel.
Yeah, where does the original Honey come from? Like, is it minted somewhere?
Over
'Cause
collateralized, right? It's over collateralized.
Yeah, it's an over collateralized CDP, and then for the Honey that they pair with these staked assets, they use an AMO mechanism.
Got it. Okay, so I can technically bridge ETH over, don't deal with the staking of the Bera ETH, and I can collateralize my ETH and then mint Honey with that. And then I can obviously take the Honey and play with the protocol as I
Do you
need, like
earn
any
fees
CDP.
if you mint the Honey because you're like locking your ETH, or no?
Yeah, so you can. I think if you were to mint Honey, you would stake it first, because you'd stake it, and then you would mint the Honey against that, and then for any Bera emissions you earn, you have to stake the Bera to earn the fees of the protocol, and then like the longer that you're staked for your Bera, the more that you stake, you get a larger share of that Honey. And this isn't confirmed, but my guess is that like the Bera NFT holders are going to get some share of that BGT. BGT is the token that you get from staking the Bera, which indicates how much of the Honey that you receive from the fees that are printed on the chain.
Got it. Okay.
Does that make sense? I know it's like there's like it's like pretty novel, but I think it's like, I don't know, I think it's very interesting if they can figure this out.
Yeah.
And like the team, they seem like very smart dudes that have worked on this a while.
Yeah.
So we'll see.
I follow it. It'll just take some time to marinate and digest, because I've heard different explanations of Bera in the past. I've read a few threads.
Yeah.
But since it's like so novel, it takes some time to understand and digest.
100%. Yeah.
Definitely clicking for me after hearing it the second time. So I'm pretty sure by the 69th time, I'll totally get it.
Yeah.
And but I want to ask you for D24. So how do we play this then? Like you said, the chain is not going to come out until 2023. So what do?
What do?
Yeah, I mean, I aped like some of the cheaper NFTs, to be honest. I believe that they will have utility around them, but that's not financial advice. I have no idea. And then it's like what I've been doing is just watching for projects building on Bera. There will also, I believe, be an incentivized testnet. So like I think that they'll talk about that in the Discord, and like, I'm not sure how you get invited to that. And like, I think the way that I heard it described was, since there's a lot more to do on Bera than your typical L1, they want to give people time with the test net to do all these different things. And then I believe that'll be incentivized. So I would say like follow, watch them, figure that out, and then kind of track like projects that are building there. Because I think I think that once they launch, hopefully like it times well with like RB season, then they launch, I could see like, a lot of liquidity migrating over there. Because if you think about like just the base layer L1 mechanism, like what you can build on top of that, like there's probably some pretty interesting sort of vaults and stuff you can build utilizing that.
Yeah, like especially like projects building on there. CrocSwap's really impressive, honestly. Like I've been hearing about them for over a year now, and it's cool to hear that they're building on Berachain.
Yeah, I agree.
And then the second thing I was going to say is, since it's a Cosmos SDK, and since it's mainly, revolves around like this order book, exchange, perps, the first thing I think of is DYDX. I think of, both like Bera and DYDX kind of, since they're both their own chains, like competing in a sense. And also just seeing like the success of DYDX over the past few years. If you like use them as a model for Berachain, if Berachain has this novel liquidity accumulation mechanism, I think if all goes well, and it's quite bullish for Bera.
Yeah, for sure. And like the other thing is like they're totally EVM compatible too. So you can just port an Ethereum application built on Solidity onto Bera too. But yeah, I mean, you're seeing a lot of interesting stuff on Cosmos. To be honest, it's like an ecosystem I haven't paid much attention to. But I feel like you're seeing a lot of building there. So it'll be interesting to see it play out. And the whole cross-chain MEV thing I mentioned, like I've heard like the Flashbots guys talk about like being pretty like thinking about cross-chain MEV with Ethereum and like seeing what's going on in Cosmos and like kind of using that as something that they're looking at. I think there's like a lot happening there that it's probably worth paying attention to.
Yeah, I think what it comes down to, like the attraction of building your own chain and owning your own land is just so great that you're just going to naturally have a lot of people go and build on Cosmos. It's just a matter of, can those app chains get, you know, enough traction and enough users and be sustainable? And, you know, it seems like Berachain's doing a good job, and a phenomenal job of building community, especially before their launch, and attracting quality projects. And I think that's one commonality that you see between Arbitrum and Bera is they don't necessarily have incentives stated yet, but it still attracts high quality builders, which says a lot, especially in this, you know, especially in this era and previous eras where it's just like incentives, and like those incentives are so short-term thinking, and then they run out, and then people are like, what do? And they move on to the next thing.
Mm-hmm. Yeah, 100%, man. I couldn't agree more. I think you'll see like a lot more of that, and I think it's going to be hard for chains that don't focus on building that community first to thrive. And like I also would just say too, like I want to like there's a lot to be said to like building also just on ETH and maintaining the security of Ethereum. Like I think there will be some successful app chains for sure, but I don't think it like makes sense for everybody by any means.
I agree. It's not as simple as black and white.
Yeah, exactly. Like I think that the way I heard the Bear team describe it is what they were trying to build into the L1 like logic and mechanics like was more doable on like Tendermint than Solidity, like building like the AMO functionality like into the base layer. Like I don't know that was possible on Solidity, but and again, so like makes sense, but I don't know that it makes sense for everyone. But some of these bigger protocols, like I could see it working for.
And if we're good on moving forward, I'd love to get D24's thoughts on like Aptos and Sui and all that side of the crypto CT.
Yeah, I don't know. I mean, like there'll definitely be interesting plays there for sure. I just haven't paid like that much attention to it. It feels like but I'm sure there will be like interesting apps there to find. I just have dedicated, like, to be totally honest, like zero time. Like I couldn't tell you anything. But we'll see.
Yeah. And what about Celestia?
Yeah, I mean, I've heard like great things like about what they're building in the tech. Like I haven't looked like that closely at it, but like I think it's interesting.
I've heard of.
I don't know if there's a lot being built there yet, but like on top of it yet. But I know a lot of people are excited about it.
Yeah, I wouldn't say it's necessarily, you know, big with DeFi yet, if at all, but more just other, you know, other use cases. For example, you can build like a chat application or a Discord where people can like run their own Celestia nodes from their phones. And you
That's
like,
interesting.
Yeah, you have just like a sovereign chat app, and you can like you can choose like which nodes you want to accept in your network.
That's super interesting.
Yeah. And then, you know, I actually want to ask like one last question, and then we can get to wrapping up with rapid fire. So, what is your overarching DeFi thesis?
Overarching DeFi thesis, I would say, if I were to like sum it up, is just that like, you know, making capital markets more accessible and efficient for everyone on the planet is like huge, and that we just like need to like, you know, I guess keep marching forward and like learning like from our mistakes, I guess, and just like building like open permissionless systems for everyone to use. And just like I think we're heading there. There's there's a like if you look back, like there's just so much interesting stuff that continues to be developed on chain. And we probably have a ways to go, but I think like I see DeFi as successful. Like I said at the beginning, like if anyone on the planet from like a phone or a computer with an internet connection can trade, whether it's like a stock or a token or like, just any sort of asset they want, that's like success in my mind, I guess. Like I have like more like granular ones, I guess, but at the highest level, that's probably
We've
it.
come full circle. Global financial adoption where anybody can access powerful financial primitives from their phone. It doesn't matter
Yeah.
where they are, where they live, what country they're a citizen of, who they are.
That's like
it's beautiful.
it's any ape, anywhere, anytime.
Any ape, anywhere, anytime.
100%. Like things like move like 10 times faster in DeFi, I think, because everything's open. So yeah, I mean, I think it's for sure doable.
I feel like I've gotten 10 times older.
Yeah, man.
Right.
I didn't even think that was possible after how many years I've spent like in investment banking, but it is.
Yeah, and like you gain like XP so much faster because
Yeah.
Hard mode. Everything is hard mode here.
everything is hard mode.
Yeah.
You also like on the flip side too, you like gain like things are built faster than they like, you gain like lessons that you need to gain, I guess, quicker, like with Terra collapsing and other stuff. And it's like kind of interesting, right? Like it's like we're also repeating some of the mistakes of like TradFi markets, right? And like
course.
seeing that play out is like super interesting. But the fact that DeFi is like completely like open, like it's kind of like the last true free market on earth, right? So things just happen way faster and we front run
The final
just
frontier
what happened elsewhere. Yeah,
for now.
for sure.
Cool. Well, I am going to kick us off with some of these rapid fire questions. So there's going to be a series of lightning questions at you. All right, D24? So the first
Sure, let's
one,
do it.
what was your virgin crypto experience? And sexes don't count.
Yeah, Virgin Crypto. Yeah, since sexes don't count, probably, honestly, probably like bridged ETH over to mainnet and like, I think I tried a bridge first. I think I tried like hop. I don't know why. I couldn't figure out like how to like get the. I feel like I lost that ETH, to be honest, because I couldn't figure out how to like show it in MetaMask and thought it was gone forever. So yeah, that was probably it.
Wow. Okay. That's
Rip.
hard mode for sure.
Yeah.
Right away. Okay. Did you want to ask?
And I was like, I actually need to learn this stuff,
Oh, you got the
probably.
next one.
Okay. And on the other side, what do you like to do off chain? Hobbies, interests.
Yeah, I like to I don't know, get outside, play golf,
Touch grass.
touch grass. Yeah. When I can, that kind of stuff.
When you can.
Yeah.
What is some advice that you would give to your 10-year younger self?
Yeah, man, I would say like get into crypto earlier for sure, 100%. Like take that plus like, probably just like take a risk and like go and like figure out like I think there's a lot of interesting stuff that you can build like in crypto. And yeah, like just get in earlier for sure. That's what I would change or tell myself.
Yeah.
And then if you weren't working in, assuming you don't have a day job, if you weren't working in crypto, what else would you be doing professionally?
I'd still be grinding away, I guess, at my current job, like doing like TradFi stuff, trying to, being kind of bored, to be honest, doing what I was doing. So
Let's say you can't do TradFi. Like what else would you be doing with your professional career?
I have no idea, man.
He belongs in the numbers. He belongs in the sheets.
Yeah, I'd say what else would I be doing? I mean, it'd be sick to like, I don't know, go open up like a bar or something somewhere. I have no idea.
A degen bar.
Yeah,
For
degen
apes.
bar. Like yeah, I don't know.
Super cool. Nice.
Nice. And where can people find you online if they don't know already?
Yeah, my Twitter, which is OX underscore D24.
Oh, it's OX. I've been saying 0X. Oh, wait, no.
Oh
It
no, it
is
is 0x. It is 0. You're right. Sorry, it is 0x.
Okay, so 0X underscore D24.
Yes, sir.
Well, dude, thank you so much for coming on. Every minute of this episode was just nonstop alpha. So, like, thank you. Like, I appreciate it.
Yeah,
The
no,
viewers
thanks for having me,
appreciate
guys. It was super fun.
it. Yeah, and definitely excited to have you on in the future.
Yeah, definitely, man.
Yeah.
Oh,
All
sir.
right. Well, thanks, guys. Peace.
Well, that's a wrap for this episode of Flywheel Pod. If your brain hurts a little bit, don't worry. Ours do as well. This was a lot to take in. And this was just a really, really nice episode full of alpha. And also, like, it was really interesting to hear his TradFi background and how he still has a day job in TradFi and is still coming out with all that alpha. He's like, yeah, I don't sleep. I'm just like, I feel that. I can see that. And it's still high quality work.
Dude, I'm surprised that he still has a day job and
Yeah.
keep on having this frequency of alpha hunting. Like, what are all of us full-time degens doing? You know,
Yeah.
now like we need to manage our time better is how I feel after chatting with him.
Straight up. Honestly, like, he sets the bar for all other degens out there, all other people that live on chain out there. And so, yeah, this was a really good episode. This is one that I'm going to have to listen to again just to, like, make sure I get everything, every little detail.
Agreed. And I also like how you went through each and every single line item of his thread to really highlight each project. I think the readers probably, the listeners probably really appreciate seeing someone to elaborate on each of those projects just to get them started on their research.
Dude, of course, it's important. And I know what our viewers want. I know what they're hungry for. And we got what they need. And thanks for everyone for tuning in. Don't forget to subscribe to us on YouTube. Don't forget to hit that bell notification. Don't forget to follow us at Flywheelpod on Twitter. Join our Telegram group. You can follow me on Twitter at DeFi Dave 22. Follow my co-host at 0xK. And we'll see you next time at Flywheelpod. Peace.